The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 143. You get the Nasdaq up 26. S&P's up 10. Gold contract down $3.90 at $12.55. We have silver down 11 cents, $16.14. Notes and bonds still want higher price. You get the 10-year note up 7 ticks, 120.06. 30-year bond up 23, 144.29. Oil still catching a bid, up a buck, $71.70. King dollar up 314, 94.660. Quite a turnaround, Tom.
Definitely, yeah. Big numbers from those overnight lows. Quite a turnaround for sure.
Big numbers. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market upside down, strategies inside the option market, futures. Great program, Kevin and his team. If you haven't test-driven yet the Thinkorswim platform, come over to our website at TFNN, hit the Thinkorswim platform, they'll allow you to trade with paper money. Kevin Hinks, what's going on?
Good morning, O'Brien family. Happy Wednesday.
Happy Wednesday.
Happy Wednesday, man.
No doubt.
The market's happy today.
I'll tell you.
The shorts aren't happy, but hey.
Yeah.
They haven't been happy in a while, so.
Well, yeah, it depends what day it is, right?
Yeah.
I mean, you talk about wide price spread. The S&P's here. We had a low out here last night of 27.05, and we're at 27.39.
Not bad, 35 points.
Yeah.
You know, I think so far today's story has been that all the futures down overnight, right? The Trump White House makes a statement about China and softening some of the rhetoric on China, which if you weren't listening to the noise, it probably wasn't a big surprise that behind the scenes there's some softening going on between the two countries, and then futures turned to the upside. Then we had the 730 number, the durable goods number come out. Bonds were up 16, 17 ticks before that number even came out, and really for the next 20 minutes didn't move. Now they've drifted up to around 21 ticks in the 30-year, about 6.5 ticks in the 10-year, and not a lot of movement out of the bond market based on that number, which I thought was a pretty substantial miss if you look at the transportation number.
You know, it's amazing. And when we talk, like the banking sector and the bonds, it's like Berkshire Hathaway broke its February lows yesterday. The XLF broke it. It's like, and bonds are still up. It's like, okay, yeah. It looks like we're going to stay in a low interest rate environment. Bottom line is that, this is pretty intense that, even the 10-year can hold price. Never mind being up, it's only up 6 ticks, but it's still holding price. We're still laying underneath that 3%, so.
Yeah, here's my question, Tom. With foreign markets and the bond markets overseas, languishing, you've got Japanese economy, they're still full throttle QE. You've got the ECB not doing anything with QE until next June. Not really shocking that our bond market's having a tough time going down, even though the macroeconomic effect is, the Fed's raising rates, the Fed's reducing our balance sheet. So this is getting to be a little tricky here because I think what you're seeing is bonds, the relationship between U.S. bonds and foreign bonds is getting pretty active here. And I think that's why one of the reasons we're having trouble getting through 3%.
Yeah, no, there's no doubt. I mean, when you take a look at these currencies, what you have, folks, is that a lot of these countries took out loans in U.S. dollars, okay, dollar loans, and this is why you see some of these emerging markets getting smoked, because the bottom line, you have a twofold deal there. You get the deal that the dollar's going higher, that they get to pay back dollars, their currencies are going lower. And in an interest rate environment, it's like, okay, that's a huge problem, leverage both ways. So it's going to be wild watching this thing shake out.
Right now, and big numbers. third look at GDP coming out tomorrow, and then, of course, income and outlays on Friday. And that within that income and outlay number, there's that PCE, right? That personal consumption expenditure price index. And that'll be a key inflation. So, yeah, the bonds are up today, a continuation of the trade they've had since the Fed raised rates. But there's a long way to go in this week. And this number, make no mistake, was a disappointment in terms of the durable goods. But you still got two more numbers coming out, and there's some foreshadowing of a GDP number that everyone should be careful of tomorrow.
Yeah. So what are we going to be looking at in swim lessons today, Kevin?
Today we're going to focus on something that we talk about every now and then, but we don't. It's weekly options.
Yes.
Change how when we were on the floor, there was only monthly options. For a while, there were only quarterly options, then monthly. Now there's weekly options. We're going to show people just the little nuances between the two and teach them how to focus on the weekly instead of just the monthly.
That's sweet. Because the amazing part is that I remember when they first started the weekly options, right? And what happened at the beginning, folks, is that they weren't that liquid. But then guess what?
Exactly.
When they got liquid, it is amazing. It's like they're penny wide now. Bottom line is that
right. And there's so many things that allows you to do. Most of which is it allows you to, like, let's say there's an event, an earnings, something like that. It allows you to pinpoint that trading range and that day and trade the weekly options based on right there.
Right. Pretty amazing, man. And, of course, coming into, we got the beginning of July, we get July 4th. What's going to get intriguing here, we got window dressing. The real question is going to be, can they get some follow-through in this market coming into the weekend? Because this is going to be, it's not that it's a long weekend, but there are plenty of folks that take off the whole week, folks, particularly,
You're exactly right. Especially when you get a 4th of July holiday right in the middle of the week, Tom.
Yeah.
It's going to be a slow week next week. So this number that we get the rest of the week, they could set the tone for a complete drift in that direction next week.
Yeah. Pretty amazing. Folks, right here, every trading day, 11 to 12 Eastern Standard Time, outstanding program. Option strategies, futures, all the bit. We have the oil numbers coming out this morning. Now, this is quite a bit on the oil market once again, man. I mean, it's like crude's up another 1.7%. We're almost at $72.
Seriously.
Exactly right. I think that news yesterday that broke late yesterday about November 4th is the day that all exports, all trade in terms of oil with Iran has got to be done, or you'll receive sanctions from the U.S. That made oil spike. Yesterday you had some API inventories that were sharply lower than expected in crude oil, down 9.2 million barrels. And then, of course, we have a number coming out here. So there's a lot of microeconomic news coming out in crude oil right now.
No doubt. And we're going to get those EIA numbers 10:30.
That's right.
Okay. Listen, you have a great one, a safe one, Kevin. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thank you. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 222. You get the Nasdaq up 35. S&Ps are up 16. Percentage-wise out here, you have the Dow Industrials up 0.9%, S&Ps up 0.6, and the Nasdaq up 0.5. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 229. You get the Nasdaq up 35. S&Ps are up 16. If we take a look inside the Dow Industrials, when I just took a peek at this, we had most of them were in the positive. Point-wise, of course, it's going to be good old Boeing. Boeing's putting 63 positive points. Caterpillar is putting 20. Chevron, 18. The only ones that are negative, McDonald's is putting 6 negative points. Intel is just about flat. Inside the NDX 100, strength out here. Regeneron's up 3.4%. Netflix is up 2.4%. Ross Stores is up 1.9%. Taken away from it, Sirius Satellite is down 2%. C-Trip's off 1.4%. Paychex is down 1%. So, oil, right?
That's right. It's Wednesday. We're coming up to that 10:30 a.m. time slot when we get those oil numbers every week. So we'll jump over. You want to talk about some volatility, man. How about it, right? Even since this morning, early, we were down there at about $70.60. We're now up $1.30 from where we were just as of about 5 a.m. And come on, chart, cooperate with me. I want to pull this back. There we go. Because, yeah, quite a run. And then, you know, you go back to Tuesday morning, man, we're almost $4 above where we were trading at 24 hours ago.
It's
That's
amazing.
quite a run.
And it was a huge draw last night.
For API?
Yeah,
Okay.
it was 9-point-something million barrels.
Okay. So
I don't know what the expectation was, but that was a monster number.
Definitely. And of course, a lot of this has to do with the geopolitical deal. We're just talking to our man Kevin Hanks, just talking about, you know, the sanctions on Iran, where zero basically oil is going to be coming out of there, so that's sending the price higher. But either way, we get those oil numbers in less than 10 minutes, so let's take a look at some of the possible trades we have out here. So when I first pulled this up, and this is the good benefit of having multiple spreads, right?
Okay.
Because I was thinking, you know, oh man, we're going to be so far away from where most of these spreads are that it might not set up well. But fortunately, it's actually moved so much that we are going to have some spreads in terms of that it's going to be right at one of the pivot points. So we like to look at the different time expirations and look at possibly setting up a bullish and a bearish spread simultaneously to look for some volatility. So we'll start it off with the 11 a.m. expirations, okay? And it's remarkable that normally we do these examples oil's just moving so fast, man. I feel like we're, between the 6 minutes that we explained this trade, it's just moving. So $72 would be a price you could use for the 11 a.m.s, which is not bad, right?
That's your base.
Yeah, we're about 10 pennies away from that level. So here would be your bullish spread from 72 up $1.50 to 73.50, and you're going to have no intrinsic value here because you're about 10 pennies out of the money. And then on the flip side of that, here would be your bearish spread, where you have the same $1.50 to the downside, except all your intrinsic value is going to be in this spread. So you'd be selling the bearish spread. We'll go per one contract. You'd be buying the bullish spread. And so the difference between these is basically in the intrinsic value you're paying for the bearish spread. So they're lining up for, call it, what, $47 for both of them?
Okay.
Now, keeping in mind that this has a little bit of a bearish bias because you start off with value to the bearish side. Not much, though. You're only talking about 8 pennies in oil, of all things, that's moved $4 in the last 24 hours. And we might see a little bit more premium priced into these today with the type of moves that we've got, right? In terms of $1.50 is totally achievable before expiration when we've gotten $1.50 since 5 a.m. alone.
And because of the size of the draw, it's like, okay, the size of the draw was large, so can the miss be large, too?
Okay. You're talking about the API for last night. Sure.
Right.
Okay. So when you jump to the noons, now this is why, the noons are getting set, the noon expirations these are getting set basically ahead of the 10 a.m. launch. You have the 11 a.m.s getting set before the 9 a.m. launch, so they're going to have slightly different price levels as oil jumps around. So this one, 11 a.m.s, $72 was the point we got to use. Noon, we're going to have $71.75. So pretty similar, except, number one, you have the extra hour. You have the extra hour no matter what, right? But then you're going to have a little bit of a flip in terms of you're going to have some intrinsic value to the bullish side now. Because here's your bullish spread, same thing, $1.50.
Yep.
Except this time, you're about 20 cents in the money on the bullish side. And your bearish spread is going to be completely out of the money, so that's going to be just premium. And let's see where these line up. You'd be buying the bullish spread, you'd be selling the bearish spread. Now,
56.
Yeah, and the reason why this is going to be more is because you're going to have 20 cents of intrinsic value here, whereas you only had 10 cents, and even as we tick around, so that one's, what do we do, 56, right? But we're climbing to that 72 number. So let's just jump to the 11 a.m.s because that's going to be less intrinsic value, and set this one up again and see if it's changed at all. So here would be your bearish spread. There we go.
Yeah, it's only 6 pennies away now.
There's your bullish spread. 47, pretty similar.
Yeah.
All right, so even, what did get sucked out maybe on the intrinsic value added on, so 47 for the 11 a.m.s, about $56 for the noons, and that's going to represent 47 to 56 pennies basically away from whether it's $72 or the $71.75 that would be using for the noons. And let's just take a look
at this thing move, man.
That's it. And I could see it's happening. I said, this isn't, it's going to be moving around as we walk through the variety of trades. Now, what happens is the 8 till 2:30s, your only option, if you wanted to take both sides of the trade, would be $71, which wouldn't really work since we're a full dollar away from that. And similarly on the dailies, and that's just because oil was trading at $71 right here, when these were getting set. Not going to work as well. Now these would work, as in you want a 230 and you just want to go one way or the other. Maybe you're going to short it. Just to talk about, because that's not a bad trade in terms of 72.50. Just to talk about examples, oil's trading at 71.97. You could short it, and you get. I mean, look at the risk reward, right? You have a $3 spread.
Yes.
And to risk 70 to make 230 essentially. The reason why you're getting that risk reward is because you're selling it about 16 pennies, 15 pennies below the market. That doesn't seem like a lot of premium to lock in that type of risk reward with that type of movement, right? For sure. So yeah, if you wanted to make a volatility trade, you have the 11s, you have the 12s, and you could always just make one side of this trade in terms of like for instance, if you just want to go bearish, same thing on the 72 one. I mean, these are just, when you get this type of action in oil, it's kind of fun to look at because, same thing. You could sell that. You're only risking 24. Basically, your risk is up to 72.
Right.
And, basically, it's all premium you're paying. You have the contract trading right at 72.
Yep.
But not a bad trade if you're looking for a retracement.
Not after
from
it
where
just
we
went up
just
a buck
were,
and a half.
right?
Exactly.
I mean, you have profit potential down to 70.50. We were just there. 70.50 at 5 in the morning. And meanwhile, you're risking one to make 5, basically.
Right.
For every dollar you put up in risk, you have $5 in potential profit going one way or the other. But then you need a directional bias. That's a bearish trade.
Yes.
You know, versus the volatility trades, it's nice because all you're looking for is some volatility. But what you want to be careful of is how much they're making you pay for premium, because today's trades are a little bit more expensive than they have been.
Yeah.
With $46, because you need about 50 cents a movement. And what's important to keep in mind, you say, okay, you only need 50 cents, but to go back to, let's just say, the 11s, because that's where we're right, but almost at 72. So you only need 50 cents of movement to break even. But what's important to keep in mind is that you can only make $1.50 on one of these contracts. So it's not like if oil goes $2 or $2.50, you'll recoup it all. You could make more if you closed out one leg of it before the other, but realistically, right, your max profit, if you just kind of let them both go, is $1.50, and you're putting up almost 50 cents of that.
Money.
Should be interesting. We'll see.
Stay right there, folks. Tommy and I are going to be coming right back with those numbers. Dow right now up 215, Nasdaq's up 33, S&P's up 15. It's hard to comprehend that oil's at 72.
When's it going to be at 80? We're almost right there, right?
That's a big number, man.
We got 3 minutes. We'll see where it's at 10:30.
Come right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at those oil numbers.
So we have inventories falling 9.89 million barrels. The median estimate, I know API was a big number, but median estimate was only a decline of about 3 million barrels. So with that in line, let's jump back over to the charts and jump over. And quite a little pop. To
Look
the
at that.
upside we go, man.
Look at
No
that.
backing down.
No backing down at all.
So when we started kind of that analysis, we were trading about 71.90. We're now about 50 cents above that level. And depending on what trade we were looking at, the 11 a.m.s, we're going to have $72 being our kind of pivot point. So already, you know, the bullish trade, you're about 38 cents in the money. That was going to cost us about 46.
Yeah.
The noons, though, that was going to have a slightly bullish bias because 71.75 would be your pivot point.
Yes.
And just to pull up, so this would be your bullish spread in the noon trade where all your value would be right now. And, you know, you'd be able to close that for about 63. That was going to cost us about 56. So you can see that it was priced pretty correctly in terms of, I mean, it would have been
It's amazing.
It would have been surprising if we got no action with the type of action we've been getting today. But let alone, that's a 7 million barrel miss. In terms of estimate, right? Big numbers, and oil is climbing 72.50. We might be at 75 by the end of the show. We'll see what happens.
Well, because when you go look at the actual chart too, I think we'll pull a chart up after we go over these numbers. But the chart, I believe the top of that chart is somewhere about $74, $75.
Okay, it's recent high oil. Yeah,
right,
no,
right.
for sure. So just to go over the numbers that came out at 10:30, there's your headline number in terms of Cushing down 9.89 million barrels. Median estimate was a decline of about 3 million barrels. Cushing crude down 2.7 million. PADD 3 crude down 5.1. Gasoline, right in line. Pretty amusing with how far crude is off in terms of gasoline, right on the number basically. Distillates, basically flat. Estimate was an increase of 1.6, so that one coming under where they thought it was as well. And then you have some different inputs in crude imports production. But quite a number. Let's jump back one more time before we jump away, and we'll check back in. But, man, yeah, 72.50 as we speak.
That's quite a bar, too. I mean, that's a powerful bar.
Definitely, especially right when we just were at $70.50. We're now $2 above where we were trading at about 5.5 hours ago, let alone where we were trading at 24 hours ago, which is just remarkable, man. I mean, there it is. 10:30 yesterday. We're trading at $68. We're now $4.36 above where we were, man. That is just remarkable on a 24-hour basis.
Yeah, and so if we bring up, I'll just bring up this, take a look at what this high was out here. So, now this is going to be a delayed quote, folks, on this one here.
And that's what's great. Little plug. If you want to download that demo come for Nadex, you get those live quotes in there. It's always great. So what are we looking at? 72.70.
Yeah.
Now what's great is, so we're at 71.90 on this chart, but we know we've already spiked up to about 71.50. So 72.50, 72.70, and that is the high. What day are we looking at? May 22nd. 72.70. I got jumped. We might be back there already. No, we'll pull back a bit. Okay, look at that. So let's zoom back in. Pulling back a little bit, 72.25. We'll check back in one more time throughout the hour.
Oh, there's going to be a little volatility.
That's why I was like, oh, look at that pullback. I mean, from the highs, we're up there almost 72.60. We're now 40 cents off the high of today, but pretty remarkable. We were within about 10, 11 pennies of that high, 72.59. I imagine we might make a run for it, right? We'll see.
I want to pull this back. Let's see. We'll pull this back a year. I mean, this run in the oil market has been actually extraordinary. So let's just I'll do 2 years. I just am curious. You don't even have to. I'll do 1 year.
It's really 1 year ago. You can see that's where the run started. 42, right?
Look at that.
Yeah.
$43 a year ago.
Yeah. I mean, it was $40, I say 40, anywhere in the 40s was normal for a while. Once it got above 50, remember the bulls were kind of like, oh, oil back to where maybe $50, just mentally $50 was a big number. But we were sitting under it for a while, and then we plowed right through 50 and never stopped. Remember, I mean, we were flirting with it, there's 50, and before you knew it, you were at 65 in terms of from about October of the last year until February. Quite a run.
And then if we bring this back, let's bring this back now on
oh boy, here we go.
Yeah, 15
No,
years.
I'm like ready for the roller coaster.
Yeah, so look at this. You know, the thing that's intriguing here, you know, there's not much in the way for this to go to $107. It's
right.
Well, actually, what are these lows here? Oh, that's interesting. So the lows of 2011, a 75. The lows of 2012, a 77.
So that's a little bit of a bullish bias you're putting in there, you know, but, you know, you could say the same thing as in quite a rocket ship. This thing could be back down to $40 in no time as well.
If it gives it up,
right?
Yeah.
I mean,
no doubt. No doubt.
It goes both ways for sure.
Wow.
Pretty cool.
Amazing.
Yep.
Absolutely amazing.
Pretty cool.
Let's go take a look at some of the higher volume stocks out here today and see what's moving. We got General Electric. Oh, look at that. Let me go look at GE. So GE, yesterday bottom line had price spread. Okay, so GE, we're into the $14 bar now. So let's say they can go to the top of it. Be interesting to see if they can. This is just a dead cat bounce again, or they get some action. The you get let's see. So Chesapeake Energy is up 35. You get Bank of America up 23. Snap is up 35. You got now. This is intriguing because if we take a look at these financials, what you're going to see is that Berkshire Hathaway broke broke its February swing low. Look at this thing. I mean, this is the largest weighting structure inside the XLF. And, bottom line, we broke it. The XLF broke it yesterday. Let me just see if the XLF is trying to get back above it this morning. So we're up 13 cents. It's just getting back above it this morning.
I think we have a call. We have our man Jim from Palm Harbor. Jim, good morning.
Hey, Jim, what's going on, brother?
That's how you all.
Good, man, good.
Good morning. How you all?
Good, thank you.
Doing well, man.
That's good. I was just curious about like the diamonds. It had closed at a 61% retracement. I was just wondering if you thought today's action was more of a bounce than anything, and that it's still going to go lower. Just curious.
Yeah, that would be my take on it. If you take a look at it, what you have is this: is that your diamonds, yes, one day you come down with 9.5 million. Yesterday you do 3.8. We'll probably do about 4 million today. We'll see whether it holds price. Yeah, I mean, to me that's still a dead cat bounce out here, but we'll see how this shakes out. What we are doing is we're coming into window dressing, which, coming into July 4th, that's normally a bullish occurrence, and so we'll see whether they can get the market going. The market's going to take a lot more because of that destruction on Monday to really, get going. But guess what? We know it's done it a dozen times.
And it did this morning. I mean, what wasn't on that chart was last night's action in the diamond, just in terms of they show the opening bar, but man, the Dow done like 250 at one point.
Right. If we put the S&P up, you're going to see it right there. But from the high to the low, it's quite a move. You got you got a 40-point move, and that's 400 points in the Dow. That would be equivalent to it. So, from the lows, but not that the Dow was trading last night. You know what I mean? But. Stay right there, Jim. We're going to come right back. Our phone number is 877-927-6648. Dow right now is up 263. Nasdaq's up 44. S&Ps are up 18. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow's up 275, Nasdaq's up 46, S&Ps are up 18. I was talking with our man Jim. Yeah, so if you trade it, Jim, bottom line, yeah, you can trade it. My take is that we got a good dead cat bounce here, but we'll find out where it goes, man.
Okay. Well, I really appreciate you guys. Like I said, I always listen to you every day. So.
Well, we appreciate it, man.
We're always happy to see you pop up on that caller list, Jim.
And we've been watching that NVIDIA. So just take your time with NVIDIA, because it's interesting.
Yeah.
They get the Nasdaq up, but the chips aren't moving, man. In fact, Intel's down. So.
Right. I'm keeping an eye on NVIDIA and the indexes and a couple other individual stocks. I like tech, so I'm being real cautious right now, though.
Cool. Well, listen, we appreciate it. You have a great one, a safe one.
You too.
Thanks, Jim.
Bye.
Let's go over to our man. We got a new guest for you, folks. We are going to be talking currencies. You gotta love
Forex.
It.
Gotta love it.
Teddy Kegstad. Teddy has a website, Forex Trading Unlocked. Teddy, welcome to TFNN.
How you doing, guys?
Doing great, man. Yourself?
Morning, Teddy.
Doing well. It's a nice day in Chicago. It's not as humid as it was yesterday, so can't complain.
Welcome. Don't stay away from Florida then, man, because we got some humidity for you right here.
Yeah. But it's interesting. We do know the difference. Like even with Boston, Chicago, when that gets humid in the summer, that cement heats up and it doesn't go away.
As opposed to Florida?
Well, our sun
He is so biased, Teddy. He is so biased. I can't even understand.
I spent a lot of time in Boston. It's the same as it is here, believe me.
Yeah, no, Boston gets hot, but we're right there with you guys, man, for sure. So, Teddy, we know we were introduced to you. You do some writing over there for Nadex, but you have your site, Forex Trading Unlocked. So tell us a little bit about yourself, what you do for trading, what you're looking at in the markets.
Okay, well, I've been in the business since 1989. I started out at the CBOE. I spent over 20 years in the S&P 500 pit at the CME. So I started my company, it'll be almost 10 years in August. I do analysis for some institutional groups and traders. I do consulting in the technology space for traders and trading groups and clearinghouses and stuff. So, I built my website initially as just a tool for myself, and then it just turned into a business over time.
Sweet.
So, so I'm really happy.
So, we've had a huge amount of moves in currency, man. I mean, this dollar move when we went topside, I mean, it's taken apart, the Argentina peso, it's taken apart the Brazilian real.
Man, right.
I mean, it's taken apart a lot of currencies. So, what do you think about the dollar right now?
Well, I think the dollar right now, I mean, obviously it's not hard for anyone to know this in flux. I think that the biggest thing to really kind of watch right now is the Japanese yen.
Okay.
Because the dollar, for some reason, even with all this trade, rumblings with what's going on with the trade wars and whatever, the U.S. dollar yen has been so strong for the past couple months. And the way it was looking actually like over the past week was like it was ready to actually start going down, actually.
Okay.
And I'm actually, today and tomorrow, I'm looking to see if it can get above 111 even in the Japanese yen, then I think the dollar might get a huge rally actually off of
wait, I mean, I watch that yen closely because in the gold market, which I'm in, if that yen gets stronger, gold will get stronger. But if that yen goes over that 111, man, gold's going to get toasted.
Right.
Yeah.
Exactly. Yeah, gold is something to definitely watch right now too. It's pretty interesting how with the way oil's holding up and the way gold's been kind of like skittish. It's really weird because usually you get the curve between gold, interest rates, and oil.
I know.
Right now it's not acting the way it normally does.
No, it's not. And what's intriguing is that the gold and silver equities have held up. So I mean, gold's down like $125 since April, almost 130.
Big numbers, right?
And the equities have still held up, so it's going to be like, who's going to win? You know what I mean? And the bond market, oh my God! I mean, we all think interest rates are going to go up. Well, guess what? The market's saying that I'm going to keep buying those bonds, man.
Right. Absolutely. Absolutely. Yeah, it's kind of funny you say that because I've been watching the S&Ps lately. And obviously they've been getting a little hammered over the past week and a half, and the rally that's going on right now is, I think right now it's just profit taking right now. I don't think that today what's going on is really indicative of anything new in the market, really, to be quite honest with you. So especially with the euro flirting with making new lows again, So now that's where the dollar, it's going to be interesting to see how that happens. Like I said, the yen, I'm looking for it to get above 111 even.
Okay.
Euro starts falling back down into that 115 half range, then I think we might start to see some pressure again on that cross rate.
Yeah, it's going to be intriguing, man.
There's so much going on in terms of the world, in terms of what shapes those two.
Well, it is, because both of those moves, like the euro went down so dramatically, the dollar went up so dramatically, and it's like, okay, they're bouncing around these levels only for about a week and a half, and the real question is that the first leg down, first leg up, or is it going to be a reversal at this point, you know?
Right.
So
and then you also made the comment about the interest rate market right now. Like, I'm sure you guys probably watch the 10-year more in the shorter term rates.
Yes.
I started trading the 30-year note back in the early 90s, and it's still always a benchmark for me when I'm looking at interest rates because no matter what, the long term drives interest rates in the long term, right? So, but with the little bounce they have going on, if the bonds get another two full dollar handle rally over the next, say, like week and a half going into a holiday market, I think we might see an interesting kind of like vacuum move that unfolds because we're kind of heading in. I mean, you were talking about the holiday market earlier. I kind of caught a little piece of that. We're basically coming into 3 weekends. We have the weekend coming up. We have a couple days, a weekend in the middle of the week, and then another weekend.
Yeah.
So when that happens, you know how it is, like New York and LA, to LA, all the traders are on vacation, whatever. But
Boston
the rest,
included as well, right?
Vacation, right?
Yeah.
It's amazing that you just brought up, and this is so cool, folks, because in the 90s, right, I remember when we were day trading continually, when you were in the pit, that bond, that 30-year bond, I don't know if all day traders, but you traded off the 30-year bond.
Okay.
But then it was only moving, 2 or 3 ticks, right? But as that movement came in, the correlation was so direct between that movement and the S&Ps, it was amazing. I mean, you're
100% right. When I was in the S&Ps, I used to trade the bonds off of the S&Ps.
Right.
I was always looking up at the boards, and then I'd be literally placing orders betwing the two exchanges.
Yeah. I know, man.
The world changes, man. It's
crazy.
I know.
It does, and I continue. I love the bond market. I mean, because it's just. But who would ever think that you got a 30-year moving by 19 to 20 ticks like nothing?
And
it's
like
nothing,
right?
Yeah,
right.
Really. It's
right. I know it used to be like if you had a half-handle move and made like 16 ticks in a bond move, you'd be like, oh my God, it was like Christmas.
It was seriously, man. And technology wasn't as quick then, but it was quick. But if you had a couple ticks made a big difference inside where that S&P would want to go. The correlation was so direct. What I'm trying to figure out is that like this dollar move. It's like right now, okay, is it the dollar? Is it the euro? Is it the bonds? It seems like there's divergence in there. Do you know what I mean? Like, okay, what? Well, particularly because of gold. You know, it's like, okay, man,
Right.
gold's down. You know, the bonds are up. It's pretty amazing.
Right.
Well, listen, it's a pleasure.
Yeah.
You know, we look forward to having you on again. And folks, you can go right to our website at TFNN. Right on the front page, you're going to see the Nadex news.
Yeah,
come on
Teddy's
over.
got a bunch of great articles. We got one up there for the euro-US dollar last week. We'll talk about it after the break and send people over. Teddy, thank you so much,
Teddy,
man.
have a great
Thank
one
you
and
guys.
safe one.
I'll talk to you soon.
Definitely.
Great day.
Thanks, man.
Stay right there, folks. Tommy and I come right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. And to find more out about Teddy, folks, just come over to our front of our webpage at TFNN. You're going to hit the Nadex Market News. You're going to see he writes articles over there at least once a week.
Yeah, so what's great is you click that market news if you want to go into any of the contributors there. And, like, of course, we've had Jason on, we've had Gail on. I think you might be having Jim Prince on this afternoon. Yep. And then there is Teddy right there, so you can click him, read a little bit more about what he was talking about, and then there are all his articles. So we had one, looks like last week, Euro-US dollar, talking Forex, and the previous week, dollar Japanese yen. Yeah. so you can
Bears
check
are
out some
ready
of those
to
articles.
pounce.
Oh boy, man, right?
Oil. Let's go back to the oil market.
Okay.
What do we got happen with oil out here? So volatility. Look at this thing.
Checking back in on oil, so it's 10:55 right now. We're about 25 minutes after the number, and we're at session highs of about 72.70. So just to kind of wrap up again, what we're looking at, 11 a.m.s, you could have used 72 as kind of your pivot point. Now that one was going to have a little bit of a bearish bias, right? Because we're trading at 71.90 prior to those numbers, and even the 72 number right now, you're talking about $72 in value. That total trade for both legs is going to cost about $46, $47.
Yes.
And if you decide to go for the noon, which was 71.75 was going to be the pivot.
You get some big good
That
backs
one
there.
you're looking at about $88 in value right now.
It was 57.
57
I think, right?
was costing us. And again, you know, this is where that's just one leg of the trade. You could always close that out. If you ever got a huge turnaround, your bearish spread will remain active until noon. But again, not a bad trade to trade volatility anytime. We got 80 cents of movement to the upside there.
Pretty amazing, man.
Oil, rocking and rolling, man.
Yeah, now the gasoline pumps, folks, okay, fill them up because...
Yeah, go get some gas right now before they get out and raise those prices, man, because they're coming. That's $4+ in the last 24 hours, man.
Amazing.
Big numbers.
Stay right there, folks. We got swim lessons coming up next, and then we have our man Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.